My name is Paul Atherley. I'm the chairman of Pensana PLC. We're developing one of the world's largest undeveloped rare earth projects, and we're very, very pleased to say that we've just announced a major financing and commenced construction.
Paul, good to see you again, sir. Timing is everything. Critical minerals are everything, apparently. So we are going to talk about the financing in a second, but maybe let's remind people who haven't heard from you in a while, and maybe some new people, what exactly you've got down there in Angola.
The Longonjo Rare Earth Project is basically, for the geologists in the room, it's a weathered carbonatite. That's basically a volcanic explosion that has brought some very, very valuable metals and minerals to the surface. It's been weathered. We've drilled it out, and top 30 meters contains these magnet metal rare earths, neodymium, praseodymium, et al. And we've spent the last 7 years doing the development studies for a mine that has in excess of 100,000 tons of this neodymium, praseodymium, making it one of the top 3 in the world that's undeveloped. And we've successfully taken it all the way through to financing.
And what will you be selling precisely? I know we're talking about NdPr there, but is it a mixed rare earth?
Yes, it's a good question. So I think we're aware that in critical minerals, doesn't matter whether in lithium in Western Australia or rare earths around the world, the issue is do you mine your product and sell at the mine gate and basically dig and ship to China, which has all the midstream processing, or do you start to go downstream? So in this case, instead of producing a rare earth concentrate, we've actually designed the project to go all the way down to produce a mixed rare earth carbonate, which is a midstream product, which can then be sent to, doesn't necessarily have to go to China, can go somewhere else to be turned into an oxide and ultimately a metal.
Right, okay. And you do have some, often I think you've got Hanwha, who've got an MOU with you guys. Are they sort of typical of the type of offtake partner that you'd look for?
Yes, because the obvious offtake, and we have that available to us, is basically to sell it to China. But we've been working with Japanese groups and others to see if we can send our product somewhere else and ultimately create a independent, non-Chinese global supply chain of rare earths.
Right, and do you think that's a sort of reasonable, deliverable expectation of that we should have of you? Ex-China is great in theory, but they are the experts. They're the kind of the cornerstone of the marketplace, technically and financially. Can you do it?
It's a really good question. So, as you know, there's lots and lots of rare earth mines around the world, and many of them, like us, have been trying to finance for some time. We've managed to get finance. We're at the bottom of the rare earth price cycle, and the equity markets are completely stone dead. So we are financed. So that suddenly means that everybody's turned their attention to us and said, okay, well, we can see this big demand coming for rare earths. You're the only one, or one of the only ones, that's actually financed. And just a couple of other points to make on that. We are at scale. That is, we're going to produce 20,000 tons initially and going up to 40,000 tons, which make us in the same range as Lynas and MP. So it puts us right up into the top drawer. But secondly, we produce a super clean mixed rare earth carbonate, and they are what customers want. Just on the second point you make about, okay, Pensana, you've done a great job, you've gone downstream to an MREC, but the next step in the process is the tricky one, is the hard one. It's called separation, and typically it will have sort of 27 steps to take it to produce a range of products, some oxides, carbonates, mixed products, whatever, without going through it all. And it's essentially a chemistry set that requires a lot of experience. We are aware that most of that capacity, which you're alluding to, is currently in China, but not exclusively. So we are now in discussions with parties who have got separation capacity ex-China, and that would be a very, very important step if we were able to do that, to create the non-Chinese supply chain. The reason being because the next step, if we get to oxide, is metal. And to turn an oxide into metal, that's not very hard. It's just basically electricity into a furnace and turns it into metal. I'm probably oversimplifying it, but that's it. The complex bit is separation. So we've got this great mine, fully financed, this fabulous, clean, high-grade product. What we've got to do now is create that non-China separation step.
So who are you working with?
There's not many out there, Matthew, so we'll have to wait and see. But all I can say to you is we're very popular at the moment because we're the only ones who finance. We're the only ones, one of the very few that's in being financed, one of the very few that's in construction.
Right. But come back to that sort of technical point. There's a kind of skill set. There's very few people who can do that separation. It costs money if you're starting from scratch, and there are not too many existing Western, I'll call them Western groups that can do this separation. So it's from a very small pool of people. How do you get them interested in what you're doing? What have you got to do on your side to get them to want to work with you?
So they've been talking to us for 12, 18 months, most part.
Sure. How do you qualify then? How do you qualify?
And by sending them product and feedstock and pre-qualify and all the rest of it, and going to this plant, meeting their engineers and doing all that. And I have to say, other rare earth companies will be doing exactly the same thing, but just want to make this point, it's the one that gets the finance that gets the offtake. So, first in, best dressed and all of that. So we're aiming to be able to announce something along those lines shortly to say that, this interest in our MREC, mixed rare earth carbonate, is culminated in offtake arrangements.
Right. Okay. Well, maybe let's skip to the financing bit, because it's been a long road. It's been a very interesting marketplace in terms of a volatile kind of rare earth pricing environment. That's always going to make things complicated. So in the old days, I would have looked at alternative financing to kind of get the debt stack together. Can you sort of break down the who, the how much, and what those terms are?
So very broadly, and I don't want to go into too much detail at this point, but it's our major shareholder is FSDA, which is the Angola Sovereign Wealth Fund, who have been absolutely fantastic, backed us all the way through. They are one of the components to it. The other two are Commercial Bank from South Africa, which is Absa Bank, who've made a move into Angola more generally and specifically for our project. And then the African Finance Corporation, who also have made a move into Angola, and not just our project, but other projects in Angola. And because the equity market's closed, we've been able to work out with them a structure whereby between the three of them, they put in equity, quasi-equity, and full debt stack. So it's roughly 60% debt, 40% equity spread across the three, and we're able to, as in any financing, we'll look to draw down the equity bit first, start building, and then the debt piece gets put in place. As the equity money has been spent, we then put the debt piece in place. We draw down on the debt piece to finalize the construction.
Okay, so we're going to talk about project finance, bridging loans, convertibles, grants, and offtakes, MOUs in a second. But it's all contingent on, I think you use your phrase, passing a definitive documentation and conditions precedent. What's that actually mean?
So essentially, we're there on the equity phase, so that gets drawn down up front. As you rightly point out, a financing at this stage requires detailed documentation. So we've got 6 to 9 months to put that in place. And without going through all the gory details of it, you're very familiar with what that documentation is. So we have, in your language, term sheet approved by us, by credit committee, by board of those institutions. What we need to do now is just finalise the documentation and put ourselves in a position where we can draw it down.
Right. Okay. So you're talking about definitive documentation around the financing. There's going to be usually a lead group in there which does all the technical assessment of your ability and this project's ability to actually do what it says. So who's kind of led the way there outside of your own consultants that you use?
Well, we haven't disclosed that because those reports are to the benefit of the lenders, not for us. But each of the lenders has had its own technical consultants and lawyers and etc. picking apart the project in incredible detail, and they've satisfied themselves, and we are the recipients of these offers of finance.
It's an interesting one because obviously there's not a lot of technical expertise outside of China, as we talked about earlier in the conversation. So to get someone to kind of do that work from a position of having done it before is a tough one. So what are the things that they need to believe, or they're focused in on? Because it's more than just about the build. It's got to be about that flow sheet. So again, how do their guys look at it?
Completely agree. So basically, it's a weathered carbonatite. So it's only a 30-meter top ore body, very, very high grade. Incredibly low strip ratio, like 0.2 waste to 1 of ore. So there's no mining risk there. The challenges that you're indicating is two sets of challenges. One is in the flotation part of it. We have to metallurgically domain the ore because each of the different types of ores and combination of ores responds differently. And then secondly, we have to put it through a process route that gets us to this MREC. We then have laboratories and pilot plants in Western Australia who we run this process using the existing equipment that we're proposing, produce a product, send it off to customers, get their approval, and the customers say, yep, this works. So we've had to do it from first principles rather than say, here's a proven process route like a CIL or flotation or whatever. We've had to do exactly, and that, Matt, to be honest with you, is one of the reasons why a rare earth project takes so long to finance, because every step of the way literally has to be pilot tested on existing kit to a point where you can produce a product that's satisfactory for the next step in the process.
Yeah, no, for sure.
Incredibly demanding due diligence process for the people doing it and for the team.
Right, and multiple steps for sure. That means sort of multiple drawdown points. I mean, how are you kind of structuring that kind of drawdown from whether it be the senior debt, the MES, the converts, etc. You get a whole bunch of different terms and costs of money.
You're too familiar with financing, Matt. You're dangerous. So let me just share with you, it's got two components to it, debt and equity. We're saying to you now and to everybody, we'll draw down the debt. We'll draw down the equity up front, and that is, shortly, the next couple of weeks, we'll start that process. And there's no conditionality on drawing down the equity, other than there's some approvals required going forward. The debt's more demanding, as you're alluding to, because we've got some conditions precedent to draw down on the debt that we need to put in place. But we've got 6 to 9 months to put that in place. So the more challenging piece is completing the conditions precedent for the debt. We're very comfortable that we can draw down the equity straight away and keep drawing it down.
Okay, and will you need to kind of top up the equity outside of the current, like whether it be quasi debt equity that you're talking about now? Will there be additional, I guess, dilution shareholders will be thinking about, or need to kind of go back to the market, conventional equity?
If I can take the second part first, and I will answer the first part. The second part is we're starting from a position at 84% ownership of this project. Basically, there is a scenario that we're hoping for that as a result of all of this financing, this debt and equity at the asset level, remember, this is all coming in at the asset level at various levels, our preferred option is we dilute from 84% to 70% ownership. Now, to achieve that is we, sometime in the future, have to put some more refinance, about $108 million worth of what you and I would call mezzanine finance. In other words, the mezzanine finance goes in now, and sometime between now and 2030, we need to refinance $108 million. Or if we don't want to do that, we let it convert, and if we let it convert, then we get diluted down to an expected 52%. So starting with 84, we get diluted to 70, and that's it. But we then got a $108 million mezzanine repayment facility somewhere between 2027 and 2030. Or we don't refinance that MES piece. We let it convert, and it converts. It takes us around expected 52%. So in the expected scenarios, we do nothing. We go to 52%. In our more preferred option, we take these guys out, give them the reward that they're due, and we stay at 70%.
Right. Okay. So depending on how the market reacts to what you're doing, as all things being equal, you advance the project. Share price goes up, market cap goes up. You can raise cheaper money and refi. No problem with that. Okay.
To be honest with you, we're not looking to go. We don't think the equity market's there. We just don't.
Today.
Now it changes.
But 27, 28, 29.
My reference point is uranium. So there's a company called Boss Uranium that has...
I know them. Duncan Craig. Nice guy.
Yeah. So Duncan and I were in the uranium business together when I was doing the Salamanca project in Berkeley Energy. And Duncan sat it out for, I don't know, a decade. Slightly less than a decade. But he knew at some point during the cycle, uranium prices were going to go ballistic. And he's gone from a company market cap, I think it's less than 100 million Aussie, to 2 billion. 2
Not
billion
that now. He got there, but it's come off. Like all things. But yeah, I get your point.
Timing is everything.
I'm
to you right now, and the reason why I keep buying shares in Pensana is we're a 100 million US cap company. Our nearest rival, the scale we're going at, is Lynas, which is 4 billion at the bottom of the rare earth cycle. So I want you to imagine for a moment that during this period we're talking about now, rare earth prices do anything like what they did before. You can share with me what imagination you can run with how high the Pensana share price will go.
Okay. Let's talk about. I think one thing you said earlier, and I just want to kind of get back to that, which is there was a 3.4 million largest on DFC. Are you surprised, given what you said about very few ex-China projects out there, certainly of scale? There's a lot of projects that talking about it. Are you surprised at how slowly the US or other Western countries are moving? 3.4 is nice, better than nothing, but it doesn't feel like they're putting much effort in to solve their own problems.
Watch this space. There is some great work being done by Exim, the Export-Import Bank. They're incredibly well funded. They have just announced a strategic critical minerals resource initiative, and it is to do exactly what you and I have been talking about. It's to realign supply chains to the US. So this is almost friendly fire for Europe. It's certainly challenging China. And I think you're right, they've moved slowly up until this point, but then now they're fully funded and very, very proactive. So I think you'll see a lot of activity in this front. You're already seeing it domestically in the US. But to be perfectly frank, Pensana is a lot more immediate proposition to get rare earths than saying buying Greenland or doing a deal with Ukraine or a deal with Belarus. So, we're in construction. So all I would flag for you is that, there are those discussions going on, and the impetus from Washington is accelerating.
Okay. And what are they interested? Are they interested in the Angola asset? I mean, when we last talked, we were looking at the kind of UK operation as well. So how are you redirecting your efforts, your capital, and your sales pitch?
So we're fully funded. So everything I'm saying to you now is we're fully funded, but it doesn't stop other people coming in and getting involved to either do an expansion or to realign a supply chain or to throw additional capital at us to do other things. They're difficult for us to comment because we're in quite advanced discussions along those lines, and absolutely no guarantee anything will happen. Be absolutely crystal clear. But your question was, why is Washington being so slow? I'm saying they're not anymore. They're moving, and you keep seeing announcements out of Washington with funding.
No, but what I'm asking is, what are they focused on? They're focused on what's going on in Angola because before we were talking about spending $1 billion or whatever it was for, well, it's 500 and maybe $1 billion up in the UK. Is the market that maybe change your thinking?
Yeah, unpacking that, we are loaded up with financing now that's focused on the mine. We don't have the capacity to go and do downstream separation in the UK or anywhere else. We're looking for another solution to that. That doesn't mean to say that in the future we can't do two things. One, we flagged an expansion, doubling capacity. And two is, where do we do downstream ourselves? So we parked that and said, let's explore options. And as I indicated to you at the top of the interview, is people are coming to us with options that we are keen to explore.
Right. Okay. So let's focus then down in Angola. So money looks like that's coming together, paperwork being sorted out for that, and then there's a process you've got to get through. So assuming the paperwork gets done, money starts to get drawn down. Where are you today? How much further in time is there to go? When do you start looking to, I guess, produce is the ultimate thing?
Sure.
You get revenue is what people want these days.
Yeah,
Show me the money.
Completely. So we are mobilizing now. So we've got our engineers running around organizing people to arrive on site. We expect to draw down the first of the equity component shortly. The next few weeks. That's what you do when you start building. And the timeline we're indicating to you based on conversations this morning, because it's all happening very fast, is we're aiming for completion of construction by the end of 2026. That is first production, but you and I know this is rare earth, so there will be a commissioning period. So we're well into 2027, going through a targeted 6-month ramp-up period, full production from then. And that's why I was flagging for you that this mezzanine facility, we take that out somewhere between 2027 and 2030, because that's our full production, full production at that point. I think what's more likely is that as soon as we get commissioning, it's working, we will have already started on the expansion. That's what the study, what the DFC study is all about, and that will move pretty quickly. So I think the moment we're constructed, the moment we're commissioned, we know it all works, then I think we're into expansion from there.
Right. Okay. So, and then this is a full commercial plant we're talking about here. In terms of the interim stage, people used to go through pilot plants, etc., and providing product to potential off-takers and so forth. How did you manage that part of it?
In Perth, Western Australia, they have laboratories who have got huge amounts of experience with people like Lynas, etc. And we went to the equipment manufacturers. We sent 4 container loads of material from Longonjo, proof of process for the Lobito corridor. We sent through the Lobito port through to Perth, and that's the material that's been in the laboratories, been tested for some time, ran the process through those laboratories and sent it off to customers for validation.
Right. So what sort of scale was that? I mean, usually lab, pilot, commercial, but so how much did they process? How much was essentially sent through to partners to test? I think
it was 100 tons that we sent down to laboratory. There was 4 or 5 containers, and then
right.
It's in kilogram scale to customers. But the product we're producing, we're only going to produce 2,500 tons of it per year. So that's a reasonable size. So I'm very, very confident that our product is very sought after, very welcome, and our chief commercial officer, Will Izard, travels around the world, and he's a popular lad at the moment because he's got something that nobody else has, and the potential product fully financed to be delivered towards the end of 2026.
Right, and have you revisited any of the last economic study? Because obviously the pricing has moved rather erratically, and I think a lot of last year people spent a lot of time sort of in writhing around the floor in pain because their plans had been scuppered. And so most of you refer to some of them, these non-finance companies unable to move their projects forward. So, but you're going to want to be able to tell your shareholders what the upside, what the potential is if you kind of get this thing going by the end of 2027 into kind of commercial production?
I mean, we can tell the capital cost, the operating cost, and then you have to tell us what the rare earth price is going to be in 2 years' time and beyond. And there's all sorts of forecasts out there. Any one of them makes us look like heroes. So a mid case would put us as the $750 million US. I think that's in our most recent DFS. But who knows? We could be in a boss scenario where rare earth prices go for a run and we're worth a lot more money, or they could stay flat for longer and we've got to struggle through a more difficult period. We because we're not dependent on conventional project financiers and the slightly histrionic equity market fretting about what's going to happen next week. We're building a project at the bottom of the rare earth price cycle, fully funded at the asset level with the equity market closed. When rare earth prices take off, we will see that reward. In the meantime, we'll keep building, we'll produce, we'll supply our customers and look for that reward when the rare earth price cycle turns.
Okay, I appreciate that side is crystal ball territory, but the other side of the coin is obviously capex overruns. We're seeing a lot of those in the sector. You're confident that your numbers and any kind of estimates you've got on that front are still valid?
So on that, we're absolutely alive to that, because I don't think there's been a major project of any kind that you and I are aware of that hasn't had some capital overruns. So the way the team has approached that, and huge credit to Tim George and the team, is we've got what we call modularized equipment packages. So instead of saying we're going to get all this kit, it's going to arrive on site, we're going to bolt it together, and we're going to hope it's all going to happen, we are actually having stuff assembled and delivered, not exactly IKEA flat pack, but basically arriving in containers on site and bolt together. So we very much looked forward to de-risking the project in a way that we're bringing proven containers or modules that we bolt together for the project rather than do it from first principles on site. So yes, we've addressed it in that way, de-risked in that way. Just going back to the rare earth prices, just one thing for you is, and it was something that big US fund is looking at very, very hard, and when you and I first talked about EVs, it was quite interesting actually, because there was something like 300 EV companies in China at that time. And they're all fighting each other to death to get market share. A bit similar in the US, but not the same scale. And then suddenly we had these names bob up we've never heard of before, like CATL to build gigafactories, and BYD that Warren Buffett had picked, this kind of thing. And now these are global players. BYD has just announced $100 billion US of revenue per year on electric vehicles, which 5 years ago, frankly, you and I had never heard of it. Similarly with CATL, they're building out gigafactory scale. There's one other little trend we'd like to share with you, and it's not my genius, other people are looking at it. What's happening in China right now, it's that same sort of 300 junior company ecosystems, is humanoid robots. Remember, you heard it from me first, but you and me are going to be the last generation that grow up without humanoid robots in our household. And they're all full of permanent magnets, by the way. And the 300 companies that are fighting for market dominance exist in China now. There's quite a few in the US as well. So watch this space. We think in 2 years' time, the conversation you and I'll be having won't be about offshore wind, won't be about EVs. It'll be about automation, robots, humanoid robots, which all are totally dependent on NdPr permanent magnets. Elevated high-speed rail, maglev, all of that's our future. It's an electric future based on electromagnetics. And we will be a producer going into that rising thematic going forward.
Or not. You could sell.
Watch this space. We had that same conversation about electric vehicles 5 years ago. You'd never heard of BYD. $100 billion US a year revenue right now. Watch out for this magnet space.
Paul, appreciate the update.
Thanks, Matt. Always good to talk to you.